Hey, it is 8:13 a.m. Central Time on Thursday, February 8th, and let's just quickly go through the main trade setups for the day. Now, the main question today is whether yesterday's multi-day balance breakout is now going to stick, or are we going to get a pullback into the recent range and possibly even a failed breakout attempt. Now, by default, we are still going to give more edge to the buy side above 49.95 to 5,005. That is today's initial support zone, and as long as buyers are holding ES above that area, they can still maintain control, and yesterday's breakout can still remain very much intact. And even within that zone, ideally, we want to see buyers holding ES above 5,002.5. So there are a couple of different ways that we can trade that area of support. The more aggressive way to trade that zone would be to get involved towards the upper part of the zone at 5,005 quarter, with the stop at 5,000 quarter, and with another entry at 5,000 half. So we are jumping in one tick ahead of the stop here to ensure that we are still able to exercise and execute the entirety of the trade idea. Now, as I mentioned in the morning trade plan, ideally we want to see buyers holding ES above 5,002 half. So if the market is really strong and this trade still makes sense and we're not seeing any major warning signs in real time, then we may be able to take the trade with the stop at 5,000 quarter, and ideally that stop doesn't get hit and we get to benefit from the smaller stop size. But if the stop does get hit, we still want to give that trade idea a full shot at working out, and that's why we would jump back in at 5,000.5 with our stop 1 point below the zone. Now, the initial support zone, which is 49.95 half to 5,005 half, is not a bias changing zone. And that means that a breakdown below that area is not necessarily bearish. It would be an early warning sign if the market broke below that area, and we would certainly want to see ES reclaiming and trading back above that zone if the buyers are going to regain control on the day time frame. But a break below 49.95 half doesn't necessarily mean that the whole day now has to be bearish. On the other hand, if we break down below 49.85 half to 90 half and below yesterday's RTH low of 49.88, that would be an intraday bearish indication. So in each of these instances, the expectation is for buyers to be active, and again, the ideal situation is that ES holds above 5,002 half. Holding above that area can result in a test of yesterday's high and the all-time high area at 5,028 half to 32 half, and likely a breakout even to a fresh all-time high. But if we break down below 49.88, then it would require an outside day in order to get a break above yesterday's high, and that is statistically lower odds. So if we break below 49.88, then the upside potential could be somewhat limited and we'll have to play more defense. But it still makes sense to take a long at 49.90 with our stop at 84 half. I like that we're scaling out at 49.95 half, which is the broken initial support zone, and then our high probability is going to be up at pre-market resistance, and the final can still be up near yesterday's RTH high. And then the final shot on the long side is going to be off the 49.67 to 77 zone. That is the intraday bias confirming zone. So that's kind of the final spot where buyers really need to defend if yesterday's breakout is going to remain in play. And that's a spot where there's a higher probability of larger time frame buyers stepping in. So that is where it makes sense to be a bit more aggressive, and we might either chase and get a more aggressive entry towards the upper part of the zone and just get 2R, or we might actually use 1.5 or even 2R of risk to get that more aggressive entry. So that's something that we'll have to assess in real time. As long as we're not seeing trend down type conditions, the 49.67 to 77 is likely going to be a nice buying opportunity on first test. And because that's a bias confirming zone, I am willing to be more aggressive at that area of support. And if 49.67 to 77 doesn't hold, then we can assume that Wednesday's breakout has now failed and fallen apart, and that could result in liquidation below 49.67 to 77. So we'll keep it short today. Those are the main trade setups that I'm going to be looking for. The main focus is going to be on the long side, and the only time it'll make sense to look for shorts is if there are overwhelming signs of sellers regaining control. So we'll wrap it up with that. Good trading to you, and I will catch you in the next one.